What's up, my Mind Your Money business folks? It's me yet again with another video on today's stock market news. And as always, hopefully you're in the market and not trying to time the market because that is simply impossible to do. So hopefully you guys are having a blessed day going into the weekend. So let's see what happened in the market. It says here, why does this look this way? It says stocks benchmarks seek to build on record closes to close out week. Okay. So let's see what happened. It says, happy Friday. This is the stock market today for 19 September. What in the world? No. Did I click on the wrong thing? This is live. Well, not live, but here it is. The S&P 500 NASDAQ closed at record highs for second day as tech trade headlines lifts market. So it says U.S. stocks notched fresh highs on Friday amid a record-setting rally as the U.S. and China advanced trade talks, and the Magnificent Seven tech stocks continued to climb. So hopefully you guys are investing. Hopefully you are investing, because if you're not investing, you're missing out, people. Even if you're not investing in yourself, you're missing out. Not just the stock market, but in yourself, right? Think about it. Okay, so the Dow Jones Industrial Average rose 0.4%, and the S&P 500 jumped nearly 0.5%. The tech-heavy NASDAQ Composite led gains, adding about 0.7%, as Apple, finally, stock rallied on optimism over its new iPhones hitting store shelves. So all three major indexes hit all-time highs for a second session in a row, ending the week on an upbeat note as the dust settled on the Federal Reserve's return to interest rate cuts. The S&P 500 and NASDAQ clinched their third straight weekly gains, adding 1.2% and 2.2% respectively. The Dow climbed 1%, making its second consecutive weekly gain. So that means 3 weeks in a row, if you have been investing into the stock market, into the Dow, into the NASDAQ, into the S&P 500, those stocks that, like say the Magnificent Seven, are part of all three of those indexes, right? You would have made some money. You made some money. If you're straddling the fence and you're not investing, of course you didn't make anything, right? So save for Nvidia's, the Mag 7's tech stocks all posted gains for the 5 trading sessions through Friday, led by Tesla. Tesla is doing very well. Very, very, very well. So Tesla ended the week up nearly 8%, while Alphabet, which is Google, added around 6%, and Apple jumped almost 5%. So investors on Friday were focused on details from Trump's conversation with Chinese President Xi Jinping. The U.S. president said in a post on Truth Social following the talks, "We made progress on many very important issues, including trade, fentanyl." Fentanyl? Okay. That caught me off guard. The need to bring the war between Russia and Ukraine to an end, and the approval of the TikTok deal. The details of the TikTok deal, which would allow the social media app owned by Chinese tech giant ByteDance to continue U.S. operations amid an impending ban, are not yet clear. So the Wall Street Journal reported Tuesday that the agreement would involve a consortium of investors, including Oracle, Silver Lake, and Andreessen Horowitz, whoever that is, Horowitz, taking an 80% stake in the company. Okay. So notably, a summary of Trump and Xi's talk in Chinese state media did not provide a detailed update on a TikTok deal beyond saying that Xi supported a commercial solution to the problem and that he wanted a set of rules that would allow Chinese companies to invest in the US. Okay. All right. So the write-up from China also said that the U.S. should avoid new restrictive trade measures to avoid undermining recent trade talks. I don't know if that's going to happen. So elsewhere in markets, nuclear stocks including Oklo and Nano Nuclear rallied amid optimism in the sector. Meanwhile, chipmaker Micron, I sold my Micron stock. I sold my Micron stock a while ago. I don't know. Either way, I sold. But either way, it says here chipmaker Micron pulled back from record high ahead of its quarterly report, which lands September 23rd. Chipmaker Broadcom ended the week down 4% after a big upswing last week, which is true. I remember that upswing last week from Broadcom. Yeah, I had to mention that I sold Micron because it was one of those things where I talk about when you're investing, you want to make sure that you're able to afford your investments and not invest in too much to where you're only buying one stock per month. If you can buy a few stocks, a couple, or hundreds, possibly, depending upon how much money you're able to invest, the better. The more stocks you're able to own, like the S&P 500, the better. You will see your money grow more. But if you can only buy one or two here and there while you're getting your budget and your money right, or while you're upping your income, that's fine. Do what you can with where you're at. But if you have the ability to buy more stock, don't buy too many. Don't have like a portfolio of 15 stocks and you're only able to invest $1,000 a month into those 15 stocks, and then say one of those stocks is Tesla, and Tesla is over $400. So once you buy Tesla, you only have 600 more, and then say you have Apple, which is over 200, and then you have Nvidia, which is like 170 something. Then you have, you're not going to be able to buy all those stocks every month. So be smart about your investments. Get an S&P 500 like SPLG. It's only $78. If you have $1,000, you can buy at least 11, 12 of those stocks a month, which is good. 12 is still a low number, but it's better than only one. So let's see what the market did today with some of my favorite stocks. So speaking of SPLG gained 38 cents today, closing out at $78.30. This is the highest SPLG has ever closed, if I'm not mistaken. I believe so. Yeah. Again, I talked about when I first bought this stock at $45 or $50, and it's now up to 78. S&P 500, slow and steady over the years. Again, over the last 100 years, the S&P 500 has brought back, on average, 10% returns. So let's think about that. You're investing for 20 or 30 years, and you're buying S&P 500, and you calculate a 10% growth over the years, that compounding interest of 10%. That makes a big difference. All right, FTEC. What happened with FTEC? FTEC had a nice day today, gaining $1.96, closing out at $220.25. Tesla, a nice gain as well today. Tesla's been doing great. Tesla gained $9.22 today, closing out at $426.07. Wow. And just to think, not long ago, Tesla was down to $212 a share. And now it's back up to $426. I'm so happy that I did not share it. Being a more mature investor now, I no longer let my emotions control me when it comes to the market. Before, when I first started buying stocks, I remember yeah, when things would go down, it would scare me and I would sell. And that was the biggest mistake, because then the next week or two, the stock will go up and surpass what it was when it was at its highest. And so now if I buy back in, or when I bought back in, I bought back in at the higher price. So when you are researching and choosing to invest in certain companies, you have to ride the waves. Like the S&P 500, you have to ride the waves. Let me see. Palantir gained $5.42 today, closing out at $182.39. Nvidia gained 43 cents today, closing out at $176.67. Broadcom lost 41 cents today, closing out at $344.94. Meta lost $1.87 today, closing out at $778.38. Wow. Meta, well, yeah, Meta's doing very well. Very, 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 very well. Apple, they did have a nice day today, gaining $7.62, closing out at $245.50. Yeah, and that's it, people. That's it for the market. That's it for the stocks that I cover. Again, hopefully you guys are investing, but before you can invest, hopefully you're getting out of debt. Get out of debt, people, because debt is keeping you poor. Debt is keeping you broke. Debt is keeping you in that low place where you have no optimism and you can't see your way out of that hole that debt makes you feel like you're in, when you can climb out of it. But the only way that you can climb out of that hole or that problematic place is with a plan. Like their business plans, you need to have a plan for your life. And the plan that you can utilize to get out of debt is called a budget. And a budget is where you list the money that you have coming in after taxes. And then on the other side, you have the money that you have going out each month. And you need to go over that. Why are you broke? Why do you have so much coming out each month and so little coming in? Maybe you need to find a better job. Maybe that part-time job is no longer cutting it. You need a full-time job. Maybe it's time to put more effort into your work, to gain recognition, to get promotions. Maybe it may be time to move from the area that you live in that has limited, what's the word? Possibilities, possibilities. So move to a place where there are more opportunities, right? A city that has more jobs. There are jobs out there hiring. The problem is there are not enough qualified people. So you need to see what is needed. And it's not always a college degree. These days, with everything moving towards technology, do you have the certifications, in order to do these jobs? Get back into these fields like electricians, construction, and those are paying well. They're paying well. So anyways, so you need to get out of debt. And also when you create this budget and you start going over the money that's coming out, you may have things on, automatic, where it's automatically being charged to your credit card or your debit card, or coming out of your checking or savings account. Maybe you can cut that membership that you no longer really pay attention to, but it's being deducted from your account each month. Maybe it's time to get rid of Netflix, Hulu, Amazon Prime, and cable, and Peacock, and all of these different subscriptions. Get rid of them. You only need one, and then you don't watch that much TV. And if you are watching hours and hours of television, those are hours that you could possibly be giving to a part-time job after hours, after you've gotten off of your main job. Getting into Uber Eats, or working part-time at Walmart a couple hours, finding a job where you can, again, a few hours every day, so that you can get out of that hole that you have placed yourself in. Because only you can get you out of the situation that you have allowed yourself to be placed in, when it comes to debt, that is. All right, so create that budget, get out of that debt, that credit card debt, that car loan debt, that student loan debt, that personal loan debt. You can do it. And while doing it, and if you are working, if you are investing, say via your 401k. Stop all investments because you need all of your monies in order to tackle that debt. Don't worry, you can start investing again once you've gotten out of debt. Get out of all debt. Start creating a snowball effect, which was coined by Dave Ramsey, and that's the plan that I follow. You know, you list your debt from smallest to largest, start paying off the small ones first, and then just roll that snowball into the bigger ones until you're done. And when you're done, it could take 2, 3, 4 years, depending upon how much debt you're in, and also depending upon how much income you have coming in. Again, you may need to find a better job or a part-time job to work in order to get out of that debt. And then once you get out of debt, maybe you can let the part-time job go and just stick with your full-time job. Either way, pay off that debt. And once you pay off that debt, now you can start investing 15% of your income back into retirement. Now you need to create a 3 to 6 months living expenses called your emergency fund. Now you can invest into your kids' college fund, that 529 plan. And if you have a mortgage, now you can tackle the mortgage. Now you're just making minimum payment on the mortgage while you're tackling your debt, right? But now that you're out of debt, now you have all this free money, you can tackle your debt. I mean, your mortgage. I keep saying debt. Your mortgage, right? All right, so you paid off all your credit card debt, student loan debt, personal loan debt, car loan debt. Now you can tackle the mortgage. The mortgage is the last thing that you can tackle, or you need to tackle if you have one. If you don't have one, that's fine. If you're renting, that's fine as well. If you would like to purchase a home, save up to 20%, put it down on that home, and finance that home for 15 years. And the rule that I go by as well, your mortgage or rent should not be no more than 25% of your take-home pay. And the way that you figure that out, average how much money you have coming in a month after taxes, and you multiply that times 0.25. And that's how much you should be paying, or I think, in my opinion, you should be paying for your rent. If you're only bringing in $3,000 a month, then that means your rent should only be $750 a month in order for you to live comfortably. Now, if there's some of you out there saying, well, there's no way that I can pay that much because of the area that I live in, maybe you need to move to a lower cost area. Just my opinion. Take it however you want. Either way, finance that home for 15 years, and then you can tackle that, and more than likely you will pay that home off now that you have no bills in 5 to 7, maybe the longest 10 years. You know, and then boom, once you're out of debt, like myself, you can do what you want to do. You can fly first class if you want to. I've done it. I continue to do it. I budget for it, though. Again, just you have more control over your money and your life. So that's one less thing you have to worry about. Now, money doesn't solve all problems, but it is good to have control over it. So I'm going to end this video. So like, comment, subscribe, share this video. Let me know what you think. If you think anything at all. All right, so you guys take care. Have a blessed weekend. Peace.